There's no way to lose unless you make a bad stock pick or act extremely optimistically at the wrong time. Now, instead of dwelling on the immediate present, we'd want you to spend the next few minutes discussing several potential ways of thinking about investments, as highly recommended by Warren Buffett. This is The Financial Bridge, and we will be taking a quick review of Warren Buffett's past that will teach us how to turn our dollars into millions. But before we move on, please make sure to give this video a thumbs up, and while you're at it, click the subscribe and bell button to stay updated for more of our financing and personal investment content. Now, without further ado, let's begin. Unless you buy the incorrect stock or get overly enthusiastic at the wrong time, there's simply no way to lose. And would like to spend the next few minutes offering you some perspective on how you may think about investing, rather than the usual practice of focusing on the here and now. And a brief look of Warren Buffett's past will help all of us achieve that. To kick things off, we have a copy of the New York Times from March 12, 1942. And thinking back to those times, it was about 3 months since we had entered a war that we were clearly losing. All the newspapers' front pages were dominated by gloomy stories about the Pacific. We have also selected a few headlines from the days leading up to March 11th, which, as we will explain, was a significant day in Warren Buffett's life. Moreover, we faced serious difficulties in the Pacific. The Philippines would fall in just a few months. But we were hearing only negative news by then. The cost of a single copy of the paper, which is exactly 3 cents. On March 10th, when the news was terrible again, this time, it was about the foe clearing path to Australia. The stock market reflected this sentiment. Warren Buffett has also been keeping an eye on some City Service preferred shares that had traded for $84 the year before. The item had originally sold for $55 in the beginning of the year, early January, 2 months earlier, but as of March 10, 2019, it was selling for $40. Despite the news reports, he told his father that night that he'd like to pull the trigger and buy him 3 shares of City Service preferred the following morning, and that was the last thing he had. It was the savings he has gathered over the course of the preceding 5 years. Accordingly, his father made a 3-share investment the following morning. Now, let's examine what transpired the following day, because it truly did not go well. The Dow Jones Industrial Average dropped below 100. Specifically, it dropped by 2.28%, which equates to around 500 points presently. During that time, the New York Times ranked the Dow Jones Industrial Average lower than every other average they determined. They used to have their own averages, but those have since vanished, although the Dow Jones remains. To view what transpired the following day, Warren Buffett's father spent money first thing that morning to purchase him 3 shares of the stock while it was trading at $39 per his request. Warren Buffett's high temperature of the day was a bit over 38.1, and by day's end, it has dropped to 37, a figure that was fairly indicative of his timing in stocks that were to emerge in subsequent years. But it was now on what was formerly known as the New York Curb Exchange, and is now known as the American Stock Exchange. And yet, despite the fact that things looked very awful until the Battle of Midway, the stock fared fairly well. And you can see right there where Warren Buffett made his purchase at size 38 and a quarter. And then, in the end, the City Service Company called the stock at a price of more than $200 a share. Unfortunately, the narrative doesn't end well. It seemed like a decent idea at that time, but in the end, he decided to sell them and receive a profit of $5. However, when it dropped to 27, the prospect of making a profit looked promising. So in a way, Warren Buffett was missing his own point. Forget about what happened with the City Service and transport yourself back to March 11, 1942. Furthermore, as we have already mentioned, the situation in the European theater was just as dire as that in the Pacific. However, everyone in this country understood that the United States would ultimately triumph with being caught off guard. Sure, but we were still going to win the war. Furthermore, we were aware that the American system had been effective ever since it was established in 1776. Now, pretend you invested $10,000 during that time, and you bought the S&P 500 by investing it in an index fund. We didn't have index funds back then. Please take a moment to reflect on what we've just said, and think, if you bought a farm with the intention of living off of its income for the rest of your life, As is the case when investing in the stock market, how much would that initial $10,000 be worth today? If you're looking to purchase an apartment building to live in for the rest of your life, you should consider the income it generates before making any final decisions. What if, instead, you opted to invest the $10,000 and hold a piece of American business without ever looking at another stock price or seeking the opinion of anyone else? Just imagine how much more cash you have access to right now. And now that you've got a number in your brain, keep that in mind, and later on, you'd have $51 million. And you wouldn't have had to do anything. You wouldn't have to grasp accounting. You wouldn't have to look at your quotations every day like Warren Buffett did during his first day, where he already lost $3.75 by the time he returned home from school. You only needed to assume that the United States would ultimately thrive, that we would eventually find a way to overcome the challenges we currently have, and that if the country did well, American business would do well. You didn't have to choose successful stocks. It wasn't necessary to select a specific time in order to win. You really just had to make one investing decision in your life. And that wasn't the only time to do it. It's not like we can pick other moments in history that might lead to even better results. But while you listen to the questions and answers we present today, just remember that the overriding question is, how is American business going to do during your investment lifetime? We would like to offer one other comment because it's a little bit fascinating. Imagine you took the 10 grand and listened to all the pessimism and doom you would have heard from others your whole life. However, you'd have bought gold with $10,000. Now with the same $10,000, you might have purchased around 300 ounces of gold. Every year, you'd visit your safe deposit box and you've had your 300 ounces of gold, while the companies were reinvesting in new plans and new inventions. And you may examine it, handle it, and otherwise interact with it as you saw fit. However, it was fruitless. There would be no fruit from it. If you possessed 300 ounces of gold in March of 1942, its value would be roughly $400,000. If you had invested in gold instead of a productive asset that was making more money and reinvesting and paying dividends and maybe buying shares or something else entirely, you would now have nearly 100 times as much money as you would have had you invested in gold. In other words, if you had made a $1 in American business, you would have less than a cent to show for it if you invested it in the so-called store of value, to which you are urged to flee whenever you feel uneasy about the state of the world. For Warren Buffett, he believes it's incredible that we've been able to succeed in this country with essentially no resistance at all. It's a safe harbor for investors. The only way to lose money is to buy the wrong stock at the wrong time, which is practically impossible when compared to buying something that will yield nothing. Owning a cross-section of America and constantly investing in it over the years is a no-brainer. In contrast, trying to trade in and out of stocks while paying financial advisors is a losing proposition. Aside from the fact that there is one issue if you had followed my counsel, or this advice given in retrospect, which is always simple to provide, there is another problem. In this scenario, your helpful stockbroker dies of starvation, and you know you could have gone to the burial and made amends for what happened to them. But the truth is, you would have been better off doing this than a very high proportion of investing experts or individuals who are active. It's very hard to move around successfully and beat. Really, what can be done with a really relaxed mentality? You aren't required to be an expert in accounting, stock market jargon, economic forecasting, or the likelihood of the 3, 4, or 2 rate increase from the Federal Reserve in the coming year. In the grand scheme of things, that is of little relevance over the course of a lifetime of investing. What matters is having a mindset that you've stuck with, knowing why you are in it, and moving past the fact that you don't know how to accomplish some things. And that finally sums up our video for today. We thank you so much for watching, and before you go, what do you think about these things that Warren Buffett left for us to learn from? Do you agree or do you have different thoughts about it? Share them right away in the comment section below and we'd be more than happy to discuss them with you. But other than that, please make sure to give this video a like before you leave. But if you enjoyed watching our content, then might as well click the subscribe and bell button to stay updated for more of our future uploads. Thanks again for watching. This is The Financial Bridge, and we'll see you soon.